Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for ChartsandMarkets.com. Welcome back to the show, Bob.
Yeah, hi, Jim. It's our Friday get-together.
The sky's a little hazy from California forest fire smoke, but nothing like it was 2 weeks ago. You can still see the other side of the river from where I live.
I can see. I can't see Vancouver Island, so it's lost in the sea haze and the smoke haze.
Bob, as usual, we like to kick off the show with questions from our listeners. Our first question is from Andrew in Germany. The question: market sentiment was obviously expected to be negative today as Trump tested positive for the flu. However, I'm wondering if this event could mark the end of this phase in the post-bubble contraction, or may even signal the next pre-bubble expansion to start if Trump recovers swiftly and more stimulus eventually gets passed. The market had already been selling off the last few weeks, so is this not more likely marking a turning point in the market? And may it even alter people's opinion about the severity of the Wuhan flu to a point where more and more will start demanding an end to the deflationary policies enacted by governments around the world, which clearly need to end to get us out of this depression caused by government, not a virus.
Indeed, Andrew. Thanks. I think the news is current about possible Wuhan flu for Trump in the White House. You can't tell where this one is going to go, and good news, bad news kind of thing from day to day. But we just look at the main thing is that the fall is the time of year when a liquidity crisis can be discovered. And of course, what precedes that is a period of very intense speculation, which it has been. And this is fortunately when you've got outstanding technical tools. Actually, for Andrew, the wilder a financial market gets, the better technical tools work, because you're going from fear to greed and back again. So there's no question that right up until September the 2nd, the market was dynamic, excessively so, and then now a correction has been underway. So then let's look at a little symmetry. If it was really hot at the upside during the summer, which it was, there were signs of crazy speculation through this Robinhood brokerage internet thing. So some crazy things going on, and then we've got a question, or not a question, but a headline coming up that we can get into on that as well. But at any rate, one looks to see, or looks to expect, that perhaps the washout on this correction would be more severe than anything so far, and more in keeping with the dynamics on the upside. And so, yeah, I think we'll look at the old pattern in the fall and note that oftentimes the market can be strong in early September, turn a little heavy by the end of September, and then get really nailed in October. This is probable, but we will look for our technical work to determine when the selling is sort of maxing out. And thanks for the question.
A question from Nick. Hi, Bob. I feel you're wrong about the financial crisis that we're coming upon. You're forgetting that we are entering into a grand solar minimum. This will cause collapsing food supply around the world. COVID-1984 is a smokescreen and is well known to government. They are doing a controlled demolition of the financial system, which would have been inevitable during Grand Solar Minimum. In light of this new information, would you not agree, Bob?
Nick, thanks a lot. Food supply. We are into a Grand Solar Minimum that can continue for quite some time yet. And with that would be cooling and also increasing precipitation. So obviously there are going to be some pressure on food production. And it's interesting, going back earlier in the year, any of the grain commodity index, agricultural price indexes that we watch had been flat and bottoming for years. And then, I forget when, maybe April or something like that, Ross got a buy on the agricultural index. So that sector has been acting well. So prices are advancing, and in Canadian and Great Plains in the U.S., the growing season is shortening. Spring is coming later, and the falls, the bad weather in the fall is coming earlier. So I think the growing season in North America is shortening. But there's also something else going on, is that the weather, or the cooling, is of course going to be more noticeable in the northern hemisphere, and the changes in the tropics are less. And there's also a lot of corn, soybeans, and definitely rice being grown in more tropical areas. So let's look at the chart. We're on a bull market for the agricultures, and that's great.
We'll have more with Bob Hoye right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration, with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Bob Hoye. Bob, are we about to return to a version of Tulip Mania? Like, what was that, Holland in the 1600s?
Yeah, I've always read about that one. There's many books written on Tulip Mania. It occurred and then I refreshed myself on it recently. It occurred in late 1636 into early 1637 in Holland, which was then the financial and commercial capital of the world. So it was a very sophisticated market, and the tulip kind of developed outside of normal trade items, and also there were government authorities that looked to proper clearing of transactions and commodities and textiles and stuff like that. But the tulips was outside of the loop and just took off, a very public market. They quoted them in taverns. But anyways, we had the headline here that it was, "Forget the stock market, the rare plant market has gone bonkers." So somewhere in the States, people are buying up rare plants, and it's incredible. The Tulip Mania is worth reviewing because it shows absolute craziness. And there is some guy, I can't remember his name, put together a price index on it, and I think it's reasonably reliable. And although the tulip was not a major staple to be traded. But when it broke, it sent a hit through the financial markets, and so the money market in Holland did suffer for briefly with the crash. But one of the main things, it shows that at times financial speculation doesn't care what it's speculating in. It'll just grab whatever's happening, and here we are. I don't think there's been anything like this since the tulips, as far as growies go. But I remember back in the 80s when the sure way to prosperity was to get a couple of breeding llamas, because you could sell the offspring for about $5,000 each or something like that. And then people all over the world were having llamas, and then eventually it blew out. That one blew out as well. So anyways, it was an interesting headline.
We'll have more with Bob Hoye right after this.
Value from success. Growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. Bob, I just interviewed Rick Ackerman, who visited New York the other day. He's going to be in our version of This Week in Money this weekend. And he said it's a ghost town. There's nobody in Manhattan. What is the story with office space there?
Oh, yeah. The great boom, properties were bid up, and rents for retail frontage, on Fifth Avenue and Madison and in Midtown, really nice stuff, all soared. And then when it ended, maybe 2018, I don't have the chart in front of me, but then you started to see headlines about, rents dropping. And then later on, that's for retail space. And then later on, that property values were dropping. It would follow the retail rent down. And then now, with the government in New York City is more in favor of the rioters and protesters, Antifa and BLM and stuff, than it is in ordinary people running ordinary businesses. So a lot of the retail spaces are just absolutely shut down. And I know Rick, he's a good guy, and his eye on this would be correct. And then also, one of our subscribers was in Midtown Manhattan, fairly close to the J.P. Morgan Library, and he just shut his office right down and has a place up the Hudson River. So he just got right out of it. He says, Bob, it's dying, it's dead. And so it's part to do with a liquidity problems coming in, and also a lot to do with the horrendously bad municipal government in Manhattan, and then acting so severely on the Wuhan flu. And I'll just add that in our survey of history, there's never been an example of a government going out and shutting down an economy like this. It never happened. Even, as I've said, that going back to 1665 in London, when it was an important commercial and financial center, and it got hit by the Black Death, the plague, and 20% of the population died. Well, of course, everything got shut down, but then the plague wasn't isolated to the city. It spread out, so it was severe. But that they didn't intentionally go to shut down the economy, but with the Black Death, which is fearful, everything shut down. So this one is amazing, and it's for a flu that could be maybe a little more serious than the Hong Kong flu in 1968. I think that one was. So no, it is an operation whereby the control freaks have used a natural event to impose control. And the sad thing is that it's an instruction is that the Democrats and the left don't care what they're running or how bad it gets, so long as they are in control. And the U.S. and I would say Canada as well are on the same path that Venezuela took, where you had a very prosperous country, and then the control freaks came in, and they want to run everything, and the people who can run things get the hell out. And so it's Venezuela in only 20 years is a casebook study on central planning. And let's call it forceful central planning. And here we are, in Canada is well along on that, and then the U.S. is, under the Democrats, would be straight into Venezuela. You can't believe that people would go along with this. Maybe the election will curb the excesses of the left.
Well, the Black Plague is credited with inventing the middle class, because all the poorer people who would have done the regular work like stonemasoning all were dead. So if you were a skilled stonemason or had another trade like that, you could charge pretty well whatever you wanted for it.
Oh yeah, they lost labor, but also it's interesting, Jim, is separate work. There was a long contraction, weak commodity prices, right down to the plague hit 1347, 1348, 1349 in there, and this long cycle in prices did come down and bottom and turned up, and now that was right on schedule. So when I look at it as a historian, it's sort of fascinating that the prices did turn up when they should have. But then you've got the detail that, they had a sharp loss of labor, but then they had an equivalently sharp loss of consumption. So, the middle classes really began to become prosperous and independent in the early 1600s. That's where things started to work for society, and I love to read the history of it.
Bob, another headline you noticed, initial public offerings, IPOs, are at their busiest since the .com bubble. What? Is this a warning that we're into another bubble like the .com?
Oh, it has been. And now there's one, I recall reading, Jim, and I don't know where it is, but one analysis of the stock market peak on September 3rd, 1929, was that all of a sudden the liquidity in the stock market disappeared. And that was due to people having to settle all the new issues, the IPOs that were being done. So then the money went out of the stock market and into corporate treasuries, Treasury Department. So who knows? I thought it plausible when I read it, and who knows where it's happening now. But all these new issues, or as they call them in the States, IPOs, initial public offerings, have to be paid for. And then the money will then go into the corporate treasuries, and it'll be a while before it gets spent. So maybe this is part of the disappearance of liquidity that you can get in the fall in a year when you've had a fabulous bubble accomplished. So the speculation, as we said earlier in the show, has really been measurably outstanding, and the markets are correcting. And we're going to go back to our old reliable friend, and that's the yield curve. which is the difference between short-term bonds like Treasury bills and long-term issues like 20-year stuff. And when the curve inverts, that's when T-bill rates invert and get higher than long rates. That then has always been followed by a recession. And our charts on this one go back to 1857. And the rule is that the curve inverts in the U.S., you get a recession. The curve inverted the previous summer, and the recession started in February. Yes, it's been made worse by the manipulations by the state, the deep state on the Wuhan virus, but the rule of thumb worked. Inversion, then a recession. So, and until all of this changes, the recession is on. But I don't know whether with the rebound that came out of March, whether the National Bureau of Economic Research, which is the NBER, and it keeps track of the business cycle, whether they now suddenly say, oh, we now have a positive economy, and I don't know, and they don't know until they make up their mind on it. But in 1980, you had two recessions, or a recession, a brief bounce, and then another recession. Two were close together. So this is an aside, but the thing about the headline on the busiest third quarter since the dot-com bubble, and the headline concluded with, there's a lot more to come, which is about as positive as you can get. And we will keep this headline in mind just in case there's further downside to the markets over the next 4 or 5 weeks.
Bob, thank you so much for being on the show.
Yeah, Jim, good to be with you, and look forward to next week.
My guest has been market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. If you have any questions for Bob and he loves to answer them, you can send them to info@howestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.